Okay, welcome everybody to Wall Street Reporter's Next Super Stock, a live stream November 16th. We have a busy and exciting day for you with some great companies. First on deck, of course, is Reliq Health Tech, RQHTF, over-the-counter RHT on the TSX, Dr. Lisa Crossley. Lisa, welcome back.
Thank you. Thanks for having me back.
So for anybody brand new to our program, our goal is to bring you those stocks which have that 10x to 100x upside potential, companies going after multi-billion-dollar market opportunities at a key inflection point and multiple catalysts in place. And again, we've had 9-10 stocks already. They're up between 1,000 and 5,000%. And Lisa, we got it now. RHT is next. RHT is next on this list to join this pantheon. You're definitely doing all the right things. The catalysts are there, the inflection point. Today's news was, I think just more good news. A new contract keep closing. I mean, I think it's pretty apparent to investors that you've hit that inflection point. Was it 3, 4, 5 months ago, and things are just snowballing.
Yeah, I mean, today's announcement is definitely, very good news. It's not only are we penetrating another state, California, we do have some footprint there already, but it was hit pretty hard by COVID. And so that's delayed, in some cases, a lot of the clients there. But these are brand new clients. They're statewide. They're very large. So, if you look at most of our announcements in the last few months, physician practices, these are 3 networks in hospice care, care management, and home health. And they bring over 200 physician practices and over 50,000 Medicare patients to the platform at full deployment. If you look at the typical fee that we're charging for these clients, it's about $65 US per patient per month. So you're looking at over $40 million in annual revenue from these clients at full deployment. So it's a very big step forward for us. And it's very nice for us to be able to expand. I mean, obviously we're very, happy in Texas and the other southern states and Puerto Rico and the US Virgin Islands. But I think it's nice, a nice demonstration for the market that, our value proposition extends beyond kind of a few specific deep South states. I mean, California is a very, very large state, so it's a
national. Yeah. No, it's very interesting. Okay, so the takeaway is, I mean, in case anybody missed it.
Yeah.
So this contract, it's 3 contracts basically. Potentially, this is worth $40 million plus once you have these 50,000 people onboarded. Now,
sorry.
So the question, I guess the question is, okay, what are the odds that you're going to get all 50,000? Like, so people can kind of see what the numbers can come out.
Yeah, I mean, you can see that in California, the average physician will get about $400 per patient per month by deploying, the Yugo Care platform. So it's hard to imagine that any of those Medicare patients wouldn't ultimately be enrolled in our platform. We're talking about very significant revenue for these physicians. Sorry about that. We haven't finalized implementation plans with physician practices. So with these particular clients, we do know that 2 practices will go live next month, but it's still, fairly early days. It's just, these are very material contracts. So we had to announce them now, but we'll provide follow-up announcements as we have more details on the implementation plan. But I think it definitely will translate into significant upside for 2022 and 2023.
Okay, so by the way, one of the things that I want to do today is we want to spend some time on audience Q&A, and we'll go into more of it later. But right off the bat, I think this is worth asking. So was today's announcement, is this one of the big clients that you were expecting? I think you kind of referenced potentially some big. Is this what's?
No. Oh. This isn't. So, when we've talked about large clients, we're talking about groups that have very large patient bases that are much larger than anything we've announced to date. So, 50,000 patients is fantastic. It's great revenue potential, but it's not one of these much larger networks that we've been in talks with. And I think without getting too forward looking, we've talked about, our revenue targets for this year, and certainly part of that target for this quarter includes a very substantial hardware order that will flow through us. We don't want to be a hardware company going forward, but there will be some large clients who want us to procure the hardware, and we'll get some margin on that. I mean, at the moment, we're actually averaging about a 50% margin on hardware, which isn't bad. I mean, that's relatively recent, but obviously software and services are our primary product, but going forward, probably 10, 15, 20% of the business will continue to be hardware, because we will agree to do that for the larger clients who need help with procurement, and we can certainly do that for them. It's not something we're going to do for every client. We've sold all of our existing inventory, but we can provide hardware to new clients by through agreements with manufacturers where we don't have to pay until the client pays us. So we don't need to tie up a lot of working capital in hardware, but we can take those margins and that revenue, and that's not a bad thing. But overall, our fundamental value proposition is around subscriptions and services, and that's the consistent, predictable, recurring revenue. And when I talk about revenue run rate, that's what I'm talking about, is the number of patients on the platform multiplied by, at any given point in time, multiplied by the revenue that we expect to generate per patient. And so that's, kind of where I think the real value proposition lies with the company, is that recurring software and services revenue.
Okay, so we're going to get into some audience questions in a few minutes, and we got a bunch of questions here. A lot of them are related to the financials from the last quarter,
sure.
so
Yeah.
We'll have time to go into all the details, because a lot of people, I think, have questions about that.
Sure.
So this will be very, very good. So the main idea is, things really picking up in terms of contracts, onboarding right now. Again, you mentioned this in California. I think I'm in California right now. I mentioned this, and I'm in San Francisco today, and it's I haven't been in California in 6 months. I haven't been out here, and I'll tell you, it's pretty dead. I mean, it's like downtown here. It's like it's so. Everybody's got still with the masks and everything. And it's so I can definitely see that it was a little bit slower to pick up on the West Coast for you.
Yeah.
But it's things are coming back to normal. Probably I don't know. I'm sure on your side things are more or less stabilized then at this point.
Yeah, I mean, I definitely, some of the states have come out of COVID more than others. California hasn't sort of fully reopened the way that maybe Texas has. And certainly Dr. Fauci has suggested that by the spring, this is, we should be largely done with COVID. So, I think we'll have implementation plans with these particular clients in fairly short order. I think it's just COVID really does create a lot of uncertainty in the space. But, I think we're at the tail end of that finally. Yeah.
Okay. So this is, it's very interesting again. And, to emphasize another point is, Reliq has really been, the company's been around, a couple of years, and you've pretty much been through like every trial and tribulation for microcap, whether it was, you were early to the market, you were a pioneer, then the COVID thing slowed things down. There weren't the Medicare, the coding, the codes weren't there to get there. So now everything really is kind of going in your favor now with the billing codes and all that, which we discussed earlier. Now, one thing, now you're on track. I think one of the big things that you were saying for the last, since maybe July time, is 2 million a month run rate by end of December, which is next month. We're 43 days away. Are we still on track to 2 million? Okay.
100%. So that translates to about 40,000 patients on the platform. We're at over 30,000 now. So there's no question we'll hit that target.
Okay. So you have 30,000 patients right now on the platform.
You're freezing a little bit, Jack. Sorry.
Okay. So you have 30,000 patients on the platform now, yeah?
Yes.
Okay. And at 40,000 you'll have that 2 million a month run rate, basically.
Yes, that's right.
Okay. And that should be, 45 days. So we're getting very, very close.
Yeah.
That's going to be a big milestone for everybody Looking forward to that. I think you mentioned something like, and the margins are substantial. It's like, was it, I think 75% gross margins?
That's right, 75% gross, and we should be over 45% EBITDA. So definitely compelling margins.
Okay. You know, one thing I do want to spend a few minutes talking about later is the big data component of your business, which is a real, that has some real blue sky potential. You touched upon it last time. We never talked about it ever. It never came up. You mentioned it in the last interview. I do want to spend some time maybe talking about that, how that, you know, could impact the company's revenues, because I mean that essentially could be bigger. It could be, you know, could be as large as, you know, the remote patient monitoring revenues.
Yeah, it could definitely be massive. You know, it's a very unique data set, what we collect. It's anonymized and de-identified, obviously, but we're looking at a data set that really nobody else has had access to this point. Most of the data that's been collected from patients in this particular age group with this particular sort of demographic in terms of clinical conditions has been patient self-reported data. And excuse me, that patient self-reported data is inherently biased. So, you know, it has limited utility to the pharmaceutical companies and research institutions and governments who purchase data. This is data that's collected directly from devices, so it's considered objective data, which makes it very valuable. It's also, unlike clinical trial data, which is collected on patients who are otherwise relatively healthy, so they tend to have just the one condition, maybe two, and are taking, you know, the one clinical trial drug and probably not much else. In this case, you've got patients who are on up to dozens of medications, who may have, you know, 4, 6, 8 different clinical conditions, including not just chronic diseases, but, you know, they may have cancer, multiple sclerosis, you know, all kinds of different health issues. And so this is a very, very rich data set that will be very unique in the big data space. And I think, you know, it will be very valuable as a result.
Now, okay, so how can we talk about some numbers? Like when,
Sure.
I think, you know, I think you in the last interview, you said something, this might be about a year out. It's not something, these revenues aren't going to come in like, you know, in the first quarter. This is like,
no,
it's going to be, it's a little bit out there, but it could be substantial. So when and what are some of the possibilities in terms of?
Yeah, I mean, you can
dollars?
get about $20 per patient record for kind of fairly accessible data. So I think we'd have the potential to charge significantly more. But if you look at $20 per patient record, by the middle of 2023, we expect to have, you know, 200,000 patients. So, you know, you'd be getting at least $4 million every time you license that data. But you license that data many, many times over, and you can charge additional premiums for performing statistical analyses on the data, which we can do through the database. That would be fully automated. So we can sort of parse that data any way that a client would want. So, you know, I think it's certainly something that could ultimately generate hundreds of millions in revenue annually. It's not something that will really come online until 2023. Part of what makes data valuable is a large patient population, but also a certain amount of history in terms of how long that data is collected for.
Yeah,
It's not as valuable, but longer term, it really is.
Yeah, and again, it's sort of like, so you actually you have two things going for you, which the market loves. You have the SaaS revenues, which is that recurring snowballing thing, and then you have the big data, which is also what the market loves, because the big data companies, you know, as they get more and more data every day, so it snowballs and becomes more and more valuable. So you have this flywheel. It's a flywheel.
Yeah.
It's the whole thing which everybody loves with companies like Amazon, or I don't know, whatever. So you have essentially the same exact business model. Okay, so let's jump into some audience questions. We got a bunch of questions on the financials here.
I saw one about revenue run rate. Is the revenue run rate at the end of December based on software? Yes, it is. So the way that I calculate revenue run rate is at any given point in time, you say how many patients do you have on the platform, and I say at the end of December that by our average revenue per patient, which currently is around $40 US or $50 Canadian, and that's where you get the revenue run rate. So, you know, it's certainly the case that for the first month, the patients on the platform, we can't bill. Medicare and Medicaid will only allow us to bill for a full month. So, we're not going to recognize the revenue or bill until the second month that a patient is on. And so there may be sort of a 1 month delay in terms of when we're actually going to recognize that revenue. And then it might be another 1 or 2 months after that to collect. But, that's at that point, that's a revenue run rate you can really bank on. That's something that will be recurring revenue, that'll be regular, consistent, predictable, reliable. And so I think those are metrics that are really important. The revenue run rate really does give you a very good sort of what's the temperature of the company, how quickly is it growing, and what kind of consistent, reliable, recurring revenue can you count on going forward.
Okay. Okay. So
whereas hardware is just more of a one-off.
Okay, so question, your Q4 financial showed some inconsistencies with previous announcements in terms of onboarding. Are there issues with revenue collections?
So those are two different things, but so in terms of revenue collection, I think we've been quite clear that during the pandemic, we did extend very generous payment terms to our clients. Our vendors also did the same for us. So that worked out very well. It was sort of an industry-wide approach to coping with the pandemic. We will have finished or made it through completion of those payment plans by the end of the first quarter in 2022 at the latest with different clients. So those receivables will all be fully collected shortly. In terms of inconsistencies, of course, I'm sort of guessing at what specifically you're talking about, but I know I have had some questions about in December 2020, we issued a press release saying we'd have 12,000 patients on the platform in the next 4 to 6 months. The rate of onboarding there was definitely affected by COVID, but most of those 12,000, roughly 10,000 total patients were on the platform by the end of June. The rest were onboarded in July. So, there was a little bit of a, what do they call that, telescoping of the timeline due to COVID, but we got pretty close to hitting our mark on that. And fortunately, the issues we had to deal with in the first 6 months of the year are not, haven't really been prevalent in the second 6 months, and certainly won't be an issue going forward in 2022. So, onboarding is definitely going very well now, whereas there were nothing but challenges to onboarding in the first, certainly the first 4 months of the year were really, really almost impossible to onboard patients. Clinicians just were so focused still on COVID. And then it did start to pick up in May and certainly June. By the second half of June, we really saw this sudden dramatic increase. And that's been sort of consistently upheld for the rest of the year.
Okay. I think this is like a related question here, which I think you just addressed, right? So
yeah, and sort of maybe I wasn't clear enough. Most of those patients were onboarded in the last half of June. So because you don't see revenue for patients until they've been on in the end of their second month, you won't see revenue recognized the second that a patient is onboarded. And we did have, some patients that we sort of carried on the platform during the pandemic, but whose clinicians couldn't bill for those software services for those patients because, with Texas, the home health agencies were basically shut down to prevent cross-contamination as they did home visits at different homes. So there were lots of challenges for our clients. So there were some patients that we kind of left on the platform knowing they'd be active and billable over, eventually once the pandemic ended, which, when we started kind of saying, yeah, we'll leave your patients on the platform in March 2020, I don't think any of us anticipated that would be over a year before those patients could be billable again. But it doesn't really cost us anything to have a patient on the platform. Once we've already onboarded them, there's kind of no harm in kind of keeping them there. So, we had very little in the way of software and services revenue recognized during fiscal year 2021, but going forward, the majority of our business, the revenues will be in 2022 and beyond, and the vast majority will be software and services.
Okay, so pretty much, so I guess it was like it was the billing issues that was, until the Medicare all that stuff. That's kind of what people are referring to in terms of the financials. That was the reason for the confusion. So
yeah, I think it's not so much Medicare and Medicaid. They've been great. They've continued to really increase the billing codes. It was really just that our clients weren't able to do the things that they need to do in order to bill for proactive preventative care for these patients. So, if a physician's office wasn't able to monitor a patient or respond to alerts or do anything because they were focused solely on their COVID patients, then they don't have anything they can bill to Medicare and Medicaid. And that was part of why we ramped up our care management center, is to help clinicians who may, through the Delta variant fourth wave or whatever wave we're on now, help. And so that's been very successful. A lot of the clinicians have really taken advantage of that, and that certainly going forward will help with increasing our average revenue per patient. But that's also just been something we did for clients that was very enabling in terms of increasing the pace of onboarding. It's not relying on their solely on their in-house resources, but being able to take on a lot of that kind of care management, care administration in the background ourselves.
So what would be, okay, so for somebody who's actually looking at the financials to get an idea, okay, how is this company actually performing? When will they see, like in a normalized situation, like a normal world situation?
So
which will be when will be like that first quarter, which will be kind of reflect normal, kind of what we could expect out, ex-COVID. When will that, which quarter will that be in?
Yeah, so I think the quarter that ended September 30th will show, that transition to more normal operations. It wasn't fully normal, but I think it's a pretty good indicator of where we're going. And those results will be filed November 29th, so very shortly.
Okay.
And I always do a webinar after quarterly. So the next morning we'll do a webinar to just walk through those. But I think what the company's going to look like and what revenues will look like outside of the pandemic, that's the quarter ending December 31st, which will file by February. So,
okay.
So I think, I always say, I know a lot of microcap investors are, looking for that 10 bagger, but also, might not have the risk tolerance for the sort of traditional microcap profile company. If you sort of fall into that middle ground, I think if you want to wait until the end of February or mid-February when we're able to file those financials, there won't be any questions left at that point. We will be very conclusively resoundingly de-risked at that point. I think maybe we're not a 10 bagger at that point. Maybe we're a 5 bagger because the stock price will obviously have gone up by then. But, I still think it's a very compelling opportunity. So, it's just a question of balancing your own personal risk tolerance.
Yeah, so I mean,
early stage company that's growing. If you look back at our fiscal year end, looking at 4.5 to 16.5 months ago, that fiscal year financials, you're focusing on the wrong things. It's a growth company, and so you really do need to be looking forward. But if you're the kind of investor who's more comfortable looking back, then all you have to do is wait till February. It's not that long from now, and I think you'll have really good data to assuage any concerns you might have.
Yeah, no, well, it's interesting because the opportunity is always, in any of the stocks we've had, like any of these stocks that have actually, which is scrolling at the bottom, that have been up 10x, 20x, all these companies, the one thing they have in common is the situation is always, in the early stages, it's always like a little bit murky. Something is always like, nothing is perfect. That's why there's the opportunity. If everything was perfect, the stock wouldn't be, $1, it would be, $10.
Yeah.
So as things become, as the picture becomes clear, as the financials become normalized, as everything becomes like all of a sudden, then obviously, as it becomes de-risked and, the valuation ticks up. So it's one of those things. So, and again, it's really interesting. Reliq has been through, like so much stuff in the last couple of years. Has been, and the company has so many like followers and there's haters and there's, have like a lot of characters following the stock. Some of them are characters, I would say. So it's going to be interesting. It's going to be interesting to watch what happens in the next few months. So bottom line is the financials coming out in 2 weeks. We're 2 weeks away, basically.
Yep.
Those are going to be more normalized, shall we say, normalized. And the financials are going to be out at the end of January, right? That's for the...
I think they're due in February. I can't remember the exact date. Yeah.
And that'll be pretty much perfect, really something which people can model completely.
Yeah, definitely. But also, I think one of the things with the growth companies, every quarter, from here is going to be better than the previous quarter. So, I think where that really starts is the quarter ending September 30th. Our sales were 3 times as much in that quarter as they were in the previous quarter, which is a pretty big jump. They're going to have gone up at least that much in the last quarter of 2021, so the quarter ending December 31st. So, we're definitely on a very rapid growth trajectory, and the longer you wait, the more data there will be available that'll really show you that, sort of mathematical projection. But, now we're still a little bit at the point where, you've got a few data points, but they're, backwards looking in a company that's going through a very rapid growth phase, so they don't mean very much. But we're getting close to the point where we'll have, good data that's out there on CDAR that really shows the traction that we're getting in the growth rate.
I guess this is kind of almost a related question. Okay, so in terms of analyst coverage,
Yeah.
I know you've been talking to like U.S. institutions. You have, you got some, Canadian institutions follow the stock already. But in terms of analyst coverage, do you think that so the firms that you're talking to, are they kind of waiting until you get that clean data at the end of the following quarter before they would begin, or what
I think we're likely to get analyst coverage in fairly short order. Can't really get into any details, but the other thing I will say, and I think this is not unknown to most of your audience who are, I think, very experienced microcap investors. For the most part, analyst coverage is predicated on you agreeing to do a deal with that particular bank. We are not raising money, so it's a bit of a challenge. We have a lot of different investment banks who are want to give us an engagement letter and have us commit to a raise, and sort of dangling analyst coverage as a carrot in that, but we're not raising money, so we can't sort of sign those agreements and get the analyst coverage. We do have some groups that we're talking to where the analyst coverage is not tied to doing a raise, and so I expect that those analysts will initiate relatively soon. And once you get a few analysts on, you tend to get quite a few more. But it's a little bit autocatalytic that way. But for now, if there's a bit of a delay because we won't raise money, I think that's okay. Given that we're not trying to raise money, we don't have to be too focused on the current share price. We know, once we get a couple more quarters out, that the share price will respond very, very strongly. So, given that we're not raising, and we can afford to be patient, and I think that works in our favor.
So it's interesting in terms of, I know there's been speculation for a couple of months. I mean, maybe going back to, I think July. There was speculation that you'd be raising a bunch of money, there would be dilution, and it hasn't happened. So and I think you said that you were the cash flow positive. The company was not looking to do any raise for quite a while, and here we are. So there hasn't been anything. At what point would you consider raising some capital? Is it would you do it at these levels, or would you wait till the stock is, let's say, $2, $3? Or at what point?
I mean, to be perfectly honest, we expect that we'll be throwing off enough free cash by the end of the first quarter of 2022 that, a raise is just not going to be necessary. Where I think I've said previously, including here with you, where we might consider a small raise between now and then would be if one of the very large clients signs and wants to move forward very quickly, and we felt that a little more cushion on the balance sheet would make the client more comfortable and would allow us to accelerate that deployment, then we'd consider a small raise. But I think we're very close to the point where we're going to be generating enough free cash that raise isn't something we'd really need to consider. And I will say, as everyone knows, we've had a number of stock option issuances and some stock option exercises, which have certainly helped. And that's not something that we need going forward. And we did have some options that we needed to issue as we hired a new CTO and different things. One thing that doesn't seem to show up in the financials that I will follow up with my new CFO on is we also canceled several million options during that same time frame. issued a number of options. So, it's not quite the black and white. We were issuing a ton of options picture that it may seem, but certainly going forward, we're at the staffing levels that we, particularly on the management side, where, we tend to issue larger grants. We're past that point. We don't have any new hires that we're contemplating, and the care managers are primarily compensated by salary and maybe some commission, so that won't really be an issue going forward.
Okay, so bottom line is there is no raise on the horizon, because Canadian investors are paranoid about any kind of financing. They always think it's going to be like dilution. Oh my God, things. Actually, a lot of times stocks do get derailed. But I'm sure you're probably getting a ton of calls because the stock is liquid. You're trading 1 million shares a day. I mean, you could raise $10 million easily, even 20 million easily.
Yeah, I mean, for months we've had lots of people offering us money, but you have to keep in mind that those people, that's their business. They make money by giving you money, and that doesn't necessarily mean that works for your business. So we don't need the money right now, so we're not raising right now. If we decided we needed to, clearly there'd be no difficulty accessing funding, which is a nice position to be in. But I think that's the cliche about banks in general. They're there when you don't need the money. When you do need the money, no one's around. But we don't need the money right now. So if we were to get a very, very large client, and that was, something that we needed, a tiny bit of capital to accelerate, I think that would be overall extremely good news for the market. And, these would be clients that are a level above anything that we've announced so far. But, depending on timing, even if we sign those large clients, we might not need additional capital. So that's really the only circumstance under which I could see us doing a raise at all. And it would be a very small raise.
Okay. So when you say a large client, like what does that mean? Like, I think
clients who have at a minimum hundreds of thousands to 1 to 2 million patients. And some of those clients, when they get started, will want to start with 30, 40,000 patients right out of the gate, and not sort of 1 to 2,000 next month, but 30 to 40,000 next month. And so to kind of accelerate deployment and allow us to have some sort of temporary resources on the ground that would help really facilitate getting that going at a large scale very quickly. We might want to do a small raise under those circumstances, but that's not currently planned. And obviously we would let the market know. And the only way that we would do a raise like that would be in conjunction with obviously this large contract. And so I would expect that would be at much higher levels in terms of share price. And
at the same, so the bottom line is this. So the only time, I mean, again, anything could happen. We never, there could be an asteroid that hits the planet, but realistically speaking, there is not going to be any raise until you have, unless you get like a big, because obviously there's going to be a huge contract at some point, right? So when you get like one of these big contracts, which is going to be 200,000 patients, then you might need some cash. But again, at the same time, a contract of that size, I mean, if we look at how the market is reacting today, right? To you have this, these 40,000 patients. So I would think if you got a massive contract like that, the stock would be, trading at $2.50, $3. I mean, it would be a game changer. So I think the market would forgive you for raising, I don't know, let's say $10 million at that point. I mean,
we wouldn't need to raise that much. We're talking about 3 to 5, very relatively small raise.
Okay.
Excuse me. And the larger clients tend to have more recognizable brand names. So I think you get, more sort of response from the market as a result of that.
Okay. Okay, so that's well. Here's the thing. You've been consistent on this point since I think again since July when this topic came up of financing, and you said you weren't doing it until again you did say like unless it was a massive contract.
Right.
It hasn't happened. You haven't. So your credibility is intact in terms of this thing, and and I'm sure it's very tempting that to want to raise money because like I mean you could easily raise 10 like. a lot of CEOs would have raised $10 million at this point because it's so tempting. I mean, you get people calling you all day.
Yeah, I mean, I will say that one of the advantages of the fact that this is the fourth company I've run, but the first public company that, prior to this, the companies I ran were private. When you run private companies, you run lean. And there's not a lot of benefit to raising. It just comes down to straight dilution. There are occasions in in public companies where raising money on its own is a value creating event, but I'm of the mindset that you raise money if you need it. And if you don't, then you keep in mind that the people who are offering you the money are going to make money on the deal. And so, their motives are theirs and nothing wrong with that. That's their business model, but it doesn't have to be yours. So, if we need money and if that's going to accelerate the business, then we'll raise money. But only under very narrow, specific circumstances. And we aren't facing those right now. And if we do a raise, it'll be a small raise. Could we raise 25 million tomorrow? Yes, definitely. Are we going to? Absolutely not. There's just no reason to take on a huge chunk of additional capital and just to make all of your investment banker friends happy. And our sole priority is our shareholders and our customers, obviously. And so, if something's going to benefit the shareholders and the customers, we'll do it. Otherwise, we don't need that cash. So
no, I'm glad you appreciate it because the reality is an investment bank, especially I think especially in Canada, it's a very different financing system than in the U.S. and the Canadian bankers are really definitely not your friends. I mean and I think the reason why, rightly so, that investors in microcaps and Canadian microcaps are so concerned about financing is the way the traditional way it works is you have a handful of hedge funds basically, or the investors that the stock gets placed with. They basically start shorting your stock in anticipation of this financing, and then they try to cover later. Then they get the warrant. So I think probably some of the pressure on the stock, any of the pressure on the stock in the last few months, was probably institution funds shorting the stock in anticipation of this financing, which has never happened and is likely not going to happen for quite a while. So it's it's
or at all. I mean,
or not in the quantity that they would want. So in other words,
no, never.
let's say you get this contract for 200,000 patients, and all you raise is $3 million. That's a very little amount of money for these guys. I mean, it's really kind of. I mean, I think they're hoping for like $20 million raise where they can short 20 million shares. Because imagine if the guy shorts 20 million shares, and they clip, I don't know, 50. It's $10 million quickly, right? And they get a. It's. I mean, I should move to Canada. I mean, what a great business this is.
No, you do really need to be careful. We've seen a lot of companies take on a lot of capital that they may or may not have needed, and scrambling to do something with the capital, do an acquisition or whatever. Acquisitions can be very distracting. It can be very difficult to find one that's really synergistic. So you shouldn't take, in my personal opinion, take capital unless you have a specific need for it, and for something that's actually going to grow the business, and you can very clearly articulate how it's going to grow the business. So we're in a very fortunate position in that we don't need cash right now. So we don't have to really worry about what the stock price is doing. There's no question that once we get, the next 2 quarters filed, the stock price is going to respond. I mean, the US market in particular is really going to be able to see the traction that we're getting, and the fact that we are actively moving into a variety of different jurisdictions and expanding in those jurisdictions, and that the numbers are going to get pretty crazy pretty fast. And so it's a matter of shareholders having to decide if they want to be patient for a couple of more months or not. And that's everybody's own personal decision. But, we're very happy with where we are. And if the share price doesn't reflect the true value of the company right now, there's no question that it will once all that data is out over the next 2 quarters.
Okay, excellent. Lisa, okay, on that note, let's wrap up. Bottom line is, okay, so company's on track. You got contracts coming in, on track for the $2 million a month run rate in 6 weeks. We got financials coming out in roughly 15 days.
15
days, yeah. So there's a lot of catalysts. what else can we look forward to in the next towards the end of the year? What other? I mean, this is enough, I think. But what else? What else is there on the horizon?
Yeah, well, I mean, as I say, I think we are working hard with some of these larger potential clients. I think we're kind of nearing the finish line. So I think we'll have some other positive things to share with the market before Christmas. That will be very good Christmas presents. So just everybody stay tuned, and I think you'll be happy you did.
Okay, fantastic, Lisa. On that note, thank you again. And listen, I think not me, but not just me, I should say, but the audience, the investors, your shareholders, they appreciate the transparency. Because there were questions about the financials, and you've been very
Sure.
transparent, answering everything. And like from day one, for the last, what is it, since you came on, I don't know, 6 months ago, 9 months, I think it's already. You've answered every question. You've never ducked any questions. You show, anytime I call you, say, hey, let's, you always show up, good news, bad, whatever it is. So and you say no financing. So everything has been, so when you say 2 million a month run rate by the end of December, I would say the odds of that are very, very strong of that happening. Yeah. So based on every past track record. So,
yeah.
So again, I want to thank you, and look forward to 2 weeks from now, the big numbers.
Yes, great. And happy very early American Thanksgiving to your U.S. audience.
So. Thank you.
All right, thanks.
Take care. Okay, thank you.
Bye.
All right. Okay. Conrad.
Yes, sir.
Yes, hang on 1 second. Let me just get things set up for you here. Okay. Everything spelled correctly? Wait, ESE, where's ESE?
Yeah.
Oh, wait, I see what happened. Okay, 1 second. Okay. Okay. This is good, yeah? Okay. Okay, let me do a quick intro for the video for later. Okay. Welcome, everybody, to Wall Street Reporter's next Super Stock live stream, November 16th, 2021. We are back with ESE Entertainment, ENTEF, over the counter. Conrad Vasella. Conrad, welcome back.
Great to be on, and I love the turtleneck, Jack.
Thank you. I was the other CEO. You should have a turtleneck next time.
It's festive. I like it.
All right. So what's festive is the acquisitions that are happening now with ESE. About, I think it was 10 months ago when you were on. I think it was in January. I think it was last January. You said, look, your goal. You stated a clear goal. You want to build ESE into $100 million a year revenue esports business through acquisitions. And again, that's an intermediate milestone, not that you're stopping it. That's 100 million, maybe it could be $1 billion revenues, but 100 million intermediate goal. You just closed. You announced yesterday your fourth acquisition. It's fourth acquisition, right?
Yeah.
Frenzy. Okay, so we're almost at the end of the year now. Are you gonna have 100 million? I mean, how close are you getting? Because nobody's gonna blame you if you're off by at least you're halfway there, close to it's.
It's not about the blame game. It's just, there are certain restrictions of how fast we can go with, the TSX and legal and all these different things. And the reality is the pipeline is still there. It's still 100 million plus. We anticipate to do one more acquisition in the next kind of 30 to 90 days. And it's going to be substantially larger than anything we've done in the past. So we're very excited about it. We've been working on it for a long time. And shareholders just have to be patient because these things take time. And generally, the bigger and the better the opportunity is, it typically takes a little bit longer. So be patient, follow the news, but I want my shareholders to hold me to that because I'm going to get there.
Okay. Well, listen, I always think that, look, it's very important for a company for a CEO company to have, there's got to be a goal, an ambitious goal. And at some point you're going to get now, And I think, actually, when you said 100 million, I said, like, hey, is the guy going to get to 100 million in the first year? It might take, most likely it's going to take a little bit longer. Usually it does. I mean, but it's important. I think it's important to have an ambitious goal, and you're already getting to very close, because again, what people need to appreciate is you started with less than 2 million run rate last December. It was under 2 million. You're up to, I think, 30 million right now with Frenzy.
Yeah, and the thing that I really want to highlight, we always talk about the roll-up and acquisition strategy here at ESE, and I don't think we give enough credit to our organic growth. Our organic growth has been phenomenal, and we anticipate that to continue. We're seeing, internal growth of 30 to 50% on the organic side, so you can't take that lightly. It's very impressive. And when you combine that with this aggressive acquisition strategy, that's a recipe for success. And you're going to start seeing it quarter after quarter with our numbers.
So, okay, so you talk about you're starting to see organic growth. We're going to see, these 40%, 50% increases. Is this a result of like the synergies that you get from these acquisitions? Are you able to, is there cross-selling, cross-operation? Like, what are you able to do to kind of drive that organic growth once you put these acquisitions together?
It's all in line with my thesis and what I've been saying from the beginning. A 360 solution. So exactly what you said. There's opportunities to cross-sell, to upsell clients, to bring on larger scale clients, to lock in multi-year deals, to create stability and predictable growth. But like I said, I really want shareholders to understand that our organic growth is accelerating very fast. And quite frankly, with this acquisition of Frenzy, we anticipate that just really taking off. They provide a significant infrastructure and capabilities for us to really scale and bring on large scale clients in a fashion that we haven't been able to do in the past.
I just realized, because you've done a bunch of these acquisitions, digital motorsports. We have to do an update at some point, like with a slideshow. Yep. And I know you're not a fan of the slideshows, but we got to have a slideshow where everything is on one. We show all the different, because all of a sudden the company is a lot different than where you were a year ago. I mean, you have four different operating companies under ESE, and people want to get like so maybe you can give us kind of a snapshot, like give for anybody that's new to the story. All the operating companies, what does each one do? How do they all fit together?
Yeah, I mean, I would love to do that. And we're actually creating our business plan. We're going to be doing a corporate update for the end of the year here shortly. So I think that'd be a great opportunity to jump on. In addition to,
I love this. Conrad, I don't want to insult you, but I was saying on one of our live streams that, I hate this name ESE. I find it very boring because it's you're in such an exciting business, esports, and you got to change. Have you thought about maybe making it a more exciting? And this is a cool name because you're a 360. What about this name, Meta Gaming? I mean,
hey, we're very open. We're always here to improve. Shareholders, put out some names.
Open to that idea? Are you open to the idea of name change, a more exciting name change?
Yeah, absolutely. We're open to anything that will accelerate the business to give us more exposure. So if shareholders have ideas or they want to put something forward, this is a great platform. Put it in the comments below, and our team will have a look. And
what does the winner get? If somebody gives you the great name, what do they get?
That's a great question. I don't know. We could go for dinner and talk about the future of the business.
Okay. I think it's no, but a name I think could be I think that could help. I mean, I love this name, by the way, Metagaming 360. I mean, it's a little bit long. I mean, I like something, but it's pretty cool.
No, it's great, and I think not to get caught up in the name of the holding group, ESE Entertainment, but we have some great names. Our subsidiaries, like our acquisition, Frenzy Media.
That's good.
Esports. digital motorsports, really sexy,
all your
fun names, right?
all your operating companies have great names. Just the parent company's name is boring. You know, Frenzy. That's an esports name. Frenzy. I love it. You know, digital motorsports explains what it is, right?
Yeah.
You know, so
maybe we need to call Mr. Zuckerberg. I'm sure he has a lot of extra names after his name change.
Yeah. No. So it's okay. I'm sorry. I distracted you. You were going to give us all the different operating companies. So give us, starting from the top. Let's go. All four. What do you have?
Yeah. So let's start with the most recent acquisition. And if I could share a video, I think it's the best snapshot of really just showing. So let me just share my screen. This is me inside the studio, so you can see the scale here. Let's see here.
So this is Frenzy. This is the esport. This is the production company.
Correct here.
Okay.
Is that going on here?
No, not yet. Did you click the share button, the share screen?
Yeah.
Okay. Share app, maybe?
Yeah. I think you just have to add, maybe make me the...
Okay. I think we did it last time we did it. So what?
Yeah.
So you have to. Okay. So you share screen, and then it gives you the two options: app.
Yeah.
Or window.
Window here. Should work here.
Oh, okay. So I see. Okay, I'm getting your full screen. I just need, but okay, I see it's there. I just need the app. I think you have to play the video maybe, and then it'll start.
Let's see. What is it on now here?
Okay. So what I'm getting is basically the whole. Okay. No. Yeah. That's what I'm getting.
Hello, my name is Connor Basela, and
okay. So that is one of your windows, I think.
Well, I don't know why that's not working.
Okay.
Maybe we can come back to it. But
yeah, let's do it. Okay, I think because last time I think we set up before. Okay, so we'll show it next time. I know. So is it basically it's a demo of
me? Yeah, I'm live in the studio showing the production capabilities. Why I think it's important to show that video is because just to show the depth and the quality of the studio. I mean, this is a multi-million-dollar studio, one of the best in the world. We have AR, VR capabilities, so we're able to enter that whole conversation of the metaverse. We work with the largest publishers in the world: Riot Games, EA Sports, Ubisoft, CD Projekt. Look those groups up. We're talking 20, 30, 40 billion-dollar companies. So that gives us the ability to create content, which is the topic of basically everyone at the time, especially during COVID. Our production capabilities are tier 1 globally. Our distribution capabilities are tier 1 globally. We quite frankly have the ability to scale at the highest level across the globe because we have a great partner, not only by acquiring Frenzy, but in partnership with Polsat, one of the biggest media groups in the world. So it's really exciting from that perspective. Then we go down to digital motorsports. Digital motorsports is a leading supplier for sim racing equipment, in addition to hosting sim racing tournaments and leagues, and really driving the digital motorsports sim racing side of esports. And actually, we have some really exciting news. At the end of the month, we're hosting the first ever Digital Motorsports World Championships, which is going to be fantastic. So we'll send some links for you guys to tune in for that. People are familiar with our team, Kick Esports, a very competitive esports team that participates in tier 1 games like League of Legends, EA Sports, Apex. FIFA, etc. And then we have the WPG group. That's our kind of support, fan engagement, customer support group. So just all in all, we're just rounding up, as you can see, a real 360 solution. And they're all so synergistic. They're working great together. And I just see, like I said, a lot of organic growth in addition to our aggressive acquisition strategy.
Yeah, no. So the market, I think esports is going to be one of the. I don't say it's. Do I think it's going to be one of the big themes? I mean, it's already a big theme, but it's really just going to, I think, snowball in the coming, years. I mean, you have, was it FaZe Clan? They're going public with, they're doing a SPAC merger. I think it's going to be $1 billion valuation, and FaZe Clan is what? It's an esports team, right? More or less, right? It's basically. It's like what you have at Kick.
It's an esports team. I mean, from what I've read online, they're getting a 20x multiple on revenue.
It's going to be $1 billion valuation. Yeah.
So $1 billion valuation. Once again, highlighting that my strategy and my plan to be $1 billion+ esports company is a reality. You saw Score Media and Gaming get acquired by Penn for $2 billion. These transactions are becoming commonplace in the multi-billion-dollar price point. So for us to say that we're the next $1 billion esports company is reality. I mean, it's just realistic, because that's the valuation people are getting on the market. And then you see groups like Facebook injecting $10 billion into the Metaverse, and that's kind of the future of where esports and gaming is headed, and we're positioned perfectly to enter into that space as well.
Okay, so again, so the FaZe Clan deal is $1 billion valuation. Now you have right now the market cap of ESE is what? It's like 50 million? Not even. What is it? It's like nothing.
It's last time I checked at closing was around 70 million, 80 million
okay.
Canadian.
50 million US. Okay, yeah. So
US.
And
the question I have is, will we be the first group to have more revenue than market cap?
I think at this point you do, because right now you have what is it? You have, I don't know, let's say you 30 million plus. I think you have another deal that you're saying could be so let's say you hit 50 million run rate by January, February, right? Why shouldn't the stock be trading at 10x 500 million, which would basically, the stock would be at 10x. I mean, it's I think, and the growth rate is there. I mean, you've definitely been, I mean, your run rate went from less than 2 million to 50. It's a 15x in 10 months roughly. So by I think what the market is kind of waiting for right now is, again, we've talked about this before. Sometimes when companies, micro cap companies, they come on our platform, the market sometimes gets a little bit ahead of the stock, a little bit ahead of the reality. Then it crashes back down to, way below what the reality is. And now, it was back in February, the stock went to $4, over $4. And it got a little bit ahead of it. I mean, I think it probably got it's fair to say, maybe got a little bit ahead of itself at that point. At this point, now it's way behind where it should be based on the fundamentals. So this is the opportunity. The market is never fairly valued. We know that. And now it's actually, but I think the takeaway is this. Again, the fact that the stock was able to go from, 30 cents to $4 and change very quickly, and it traded very well at $4. So, it can easily, again, stocks always are able to go back to the previous number. So there's easily a path to the $4 plus. And I think, if you get to this 50 million run rate by January, February, I don't see any reason why it can't be, $8 plus, because by then that'll be what it's worth. No? You don't have to agree with me.
No, I mean, but that, it's not even just you saying this or myself saying this. That's what the multiples are in the market.
$20.
Oh,
Michael is not selling till $20.
Well, there you go. And
let's say 8 to 10.
But I'll add something to that comment. You look at eBet, you look at FaZe Clan, you look at all these groups, they're getting 10, 20x multiples, some in the absurd 30x multiples. Look at their revenue line. Look at our revenue line. I mean, it's just a reality right now is when we get our fair valuation, then the numbers will speak for themselves. And guess what? I can't wait till our quarters come out. And how many CEOs can say that? And not only that, I can't wait for the following quarter to come out because our acquisitions are going to fold on top of each other. Our revenue is going to grow and you're going to see the numbers, and numbers don't lie. And I'm more than happy to come on every time after every quarter and look you guys in the eyes and tell you I'm excited for the next quarter. So it's just a matter of time. And, we're delivering at the highest level. We're executing 4 acquisitions, in my opinion, hyper growth. Who does 4 acquisitions, like you said, from 2 million to a 30 million run rate? It speaks for itself. It's reality. Look at the numbers.
It could be, kind of where I think next year is probably that real inflection point. There's kind of like sometimes companies have 2 inflection. Like, so when you first came on last December, that was like number 1, where you started doing the acquisitions. You laid out this vision for 100 million order, and then the second inflection point happens. Really, probably it's going to be it looks like next year, like because 2022 is you're going to come into the year with a really a platform, a really strong foundation. And I think once the market really catches on that really you're doing this consolidation play and you're for real, this is really happening, and as they see you're getting closer to this 100 million run rate, and then you surpass that 100 million run rate in esports revenues, at that point, I think that's when you get kind of like that mainstream, institutional awareness, interest in the space, because there's really nobody else doing what ESE is doing in terms of there is. You're gonna have FaZe Clan, which is just a team. You have EGLX, which was media, right? You have who else? So you have different guys, but nobody's doing like a complete infrastructure, complete 360 solution. So when people catch on to that, when the market kind of comes around to where you are, people all of a sudden it's the thing can get really, the stock can get repriced, very dramatically to that, $8-10 number based on that revenue.
I think we will get rewarded because, like I said, numbers don't lie, and the Canadian market is tricky sometimes. Some investors and banks like to play games with shorting and things of that nature. So hopefully we could get our AMC gorillas to come in and squeeze the shit out of them. That'd be great. But you know what? I'll just stand on my numbers. I'll keep delivering. I'm in for the long haul. We're going $1 billion plus, and that's the end of it.
Okay. Conrad, let's wrap up. What can we expect coming into the, we're in the home stretch of 2021, 6 weeks to go. What can investors look forward to in terms of news flow for the next 6 weeks? Presents of Santa, any presents there?
No, I mean, our news is always material. It's always very relevant. It's big. It's quality news. It's not going to stop. We have news for the next 2 years locked up. So don't see that slowing down. We have contracts lined up for 2022, 2023. You're going to see that just accelerate and grow. Our acquisition pipeline is growing literally daily. We have groups calling us now. We have larger groups calling us about them acquiring us. It's going to be a snowball here, guys. And just watch the news. Like I said, we have something in the pipeline that's going to be the biggest deal yet for us. So stay tuned. And you've seen me deliver in the past. It ain't going to stop.
Give us a hint. You said something bigger. This is the biggest thing ever. What is it? Give us a hint.
Well, I'll leave it to you guys. You guys can do the math. So you know how big our acquisitions have been in the past, and this one's going to be a nice transformational opportunity for us.
Okay. Here's an interesting comment. I guess this is okay. So why is the stock not trading at $10 right now? So the guys, so Nedzad is saying that nobody's really done this before. So it's kind of the market. I guess, yeah, nobody's really done like a roll up of esports infrastructure. So it's kind of like people, I think like some investors have not caught up onto it. They don't know what to make of it yet until, I think once they see that there is really a pattern of this, because you've done 4 deals. In theory, by now they should get it, but sometimes it takes a little bit longer. So I really assumed, I think we talked, a couple months ago, I said, hey, as soon as you do the next deal, people are all of a sudden the light bulb is going to go off and they say, okay, I see what this guy's doing. It hasn't happened yet. So, it's going to probably happen like after the next, I'm saying it's going to happen the next deal. Probably it's going to happen the deal after that. So it might, so by the time you're hitting at like 60 million plus run rate, then all of a sudden, maybe that light bulb is going to go off.
Well, I think, Nedzad's correct. A lot of people haven't done this, especially on the venture exchange, where we're consistently delivering. We're running a tight ship. The major shareholders haven't sold the stock at all. I mean, it's unprecedented. I think patience is a great word. If you want to go big, it's not going to happen overnight. Going big, you got to wait a few quarters, a few extra months, maybe even a year, but you will be rewarded because that's where the opportunity happens of, not just my stock, but stocks being $5, $10, $15, $20. You have to be patient. You have to let us execute and deliver.
Yeah, no, this is the common thing with microcap stocks. Sometimes they get ahead of themselves. Sometimes and again, like last year, first it was early, then and now it's at that opportunity again. And it's weird because I'm looking at this chart and like I have thought for the last like 6 weeks, I'm looking at like this thing looks like it's ready to explode. And why is it not? It's like it's looking like it's on the launch pad, and who knows? It's something. It could be like it'll happen next week, but it's really at this point. I think it's a question of when, and not if. It's a question of when is the market going to realize? And it's But listen, I think it's a better, in a way, it's a better position. It's a better situation to be in now, where you're undervalued than when you started off last year when you really weren't even on the map. It was sort of like is what's going to happen and this or that. Now it's you got the numbers now. The stock I'm sure is gonna catch up. So we definitely have there's eyeballs on the stock. So it's just going to be probably the next deal. All right, Conrad. On that note, I want to thank you for coming on. Let's get you on in a couple of weeks. And I want to do it with a complete slideshow where we tell the whole story, all the operating subsidiaries. Maybe you'll have some news. When are the financials coming out? The next quarterlies. What is that going to be?
Yeah, so we have a different year end, October 31st. So you could see, anticipate those coming out within the next kind of 45 to 60 days from October 31st. So let's say to be on the safe side, kind of early January, those numbers will come out. But once again, those don't even include our Frenzy acquisition. They don't include digital motorsports. So we'll give you some visibility on our organic growth, which is really exciting. So the following quarter is going to be consolidated with everything. And that's where it might be a little bit too late for people because it's going to be very impressive.
Okay, so basically the next quarter, the quarterly financials that are going to come out early January are going to cover the period before you did the digital motorsports and Frenzy.
Yeah.
But it will show organic growth, which I think is a positive.
Yeah.
I mean, again, I think it's very important from the market to understand is, hey, you're not just doing a roll up. There's actually organic growth. It's not just a bunch of slacking together random stuff.
It's the complete opposite. Digital Motorsports is doing the World Championships at the end of the month, and guess what? They're using Frenzy as a production partner. They're using ESE Europe for other services, graphic design, technology. So we're fully incorporated already. We're working together. We're driving revenues together. I mean, it's great to see. We're running on all cylinders already.
Okay, and I know that also. Yeah, the traditionally what is it? The ESE's core business has been kind of that motorsports. You have the partnerships with Porsche, Kia. So I mean, does that benefit digital motorsport? Are you getting any synergies there?
Big time, because now we're scaling globally, right? So we're moving into new countries and regions with those big car manufacturers. We just got to get Elon Musk and Tesla on board. That's
Forget about that. Tesla's old news. Now you got what's the one? What's the
Rivian.
Lucid, Rivian.
Rivian.
You got to get this Lucid. I think Lucid is the big one, right? So you got to get one of these guys on board.
Yeah, but it actually shows you how sexy and big the automotive industry is, and how that plays perfectly into our core business of digital motorsports. I mean, it's unbelievable. I mean, the upside there, I always say it, each acquisition we make, I truly believe that they're 100 million plus standalone revenue business. And that's why we do those acquisitions.
Excellent. Conrad, thank you. And we'll catch up with you in a few weeks.
Awesome. Thanks, Jack.
Thank you again. Okay, great news at ESE. Let's get ready. So we're talking about Metaverse. Let's get ready for our Metaverse company. Let me just get things set up here. Mr. Metaverse.
It's a good title, Jack. Thank you.
I just came up with that. Like
Mr. Metaverse.
That could be like a comic book, right? There was what is it? Some other guy, Mr. Something.
There's so many Mr. Somethings. We won't go there.
Yeah. Let me just get things set up here on the screen. Okay, David, thank you for standing by. We're running a little bit late. As always, we have a lot of people waiting. They want to know what is happening at Liquid here. Let's see. Okay, let's get this popped up on the screen. Okay, spelling is correct. Yeah, just make sure.
I think so. Yeah, looks good. I'm not wearing my glasses, so I'm going to be hard for me to tell you.
Okay. Hang on. Okay, and there we go. Okay, let me just do a quick intro for the video for later. This is our live, live to tape. This is not Metaverse. This is real verse here. So we got to do this. Okay, welcome everybody to Wall Street Reporter's next Super Stock, a live stream for November 16th, 2021. We are back with Liquid Avatar, LQAVF, one of the few pure play Metaverse companies. And again, anybody brand new tuning in, our goal is to bring you those stocks which have a 10x to 100x upside potential, companies going after massive multi-billion-dollar market opportunities that are at a key inflection point and with multiple catalysts in place to ignite increases in shareholder value. We've had already, 9, 10 of these stocks that are up 1,000 to 5,000% in the last 18 months. And, we're going to find out if Liquid Avatar is going to be that next 10-bagger, 20-bagger to join this great pantheon of super stocks. So with that said, David, welcome back. It's been a while.
Wow. Yeah. Thanks, Jack. And we'd love to be one of those in the group, of course.
Well, listen. You have all the right ingredients, right? You meet all the characteristics, which is why you came on the platform. Now, here's the crazy thing. Like many companies, you first showed up on our platform almost a year ago, 12 months ago.
That's right.
You were actually early. You were like, when people watch, because you were basically talking about the metaverse. You were really a metaverse company, but you weren't, you know, I think you mentioned when we first talked about it, I was like, it was a foreign concept. Nobody understood. And all of a sudden, the market is caught up. It's like you haven't really changed. Like you're doing the same thing you're doing, but the market all of a sudden has caught up to what this is all about. This is, and obviously we're starting to see in the stock price. The investors are realizing this is a pure play metaverse stock. You know, how many are there besides, you know, Facebook, Roblox, and what's it on which is there's really very few. There's nothing under $50.
Well,
So
no, there are, and you know, in fairness to everyone, this isn't our first time doing it this way. So normally we're ahead of the curve in all our companies and have been in the past. As some of the people out there that know me know that we were into e-commerce very, very early. We were into online chat and translation very early. So
you know, this is when you first came out. I mentioned this because, you know, I said this guy is, you know, I really don't understand what he's doing, but I do know that he's kind of like a pioneer who's really ahead of, you know, market trends. You know, I mentioned it many times. I said because this and one of these, and at some point when things kind of line up, that's the opportunity for that 100-bagger. Because look, we saw what happens when a hot theme emerges, whether it was the .com. Well, you were basically early in the .coms,
right? Exactly. Yeah.
Cannabis. Let's go through every theme. The cannabis. .com. What else? I'm trying to think. What else? A hot theme.
Well, now the mushroom side of the business,
psychedelic.
right?
Yeah, the psychedelics is not as big. It's not as big as the other. But metaverse is going to be the thing now for. This is going to be the theme of 2022. So this is people can get positioned now. So with that said, we have a lot of new people watching. Maybe they're some investors from earlier, but give us kind of a snapshot of what is a Liquid Avatar today. Like, what is the company right now? What is the business all about in the metaverse context?
Well, you know, Jack, to be candid, we think of it as, you know, I've said this many times, think of it as a sort of a hard pill to swallow with some candy coating around it, right? Like you know, sort of like you would give your pet a pill, you know, and at that center, at that chewy center is digital identity. Has to be. And even our release today about Vegas Island and some of the upcoming news that we have will all be around age restriction, because if you think about it and you look at Roblox a couple of weeks ago, and they've done a fantastic job, but at the end of the day, there still were predatory practices on the site because parents may not do guardianship properly. There might be others. So at the core of everything that is changing on the internet is the fact that you need to prove that you are you. And that's been our core business, right? That's at the core. And then when you go outside of that core, the next level around that would be avatars, right? You can't be who you are online without having a persona to manage that. And there's lots more to come from our company and our clients on avatars. And then the third thing around that is, for lack of anything better, playable surface, engagement, immersiveness. And so that becomes the metaverse. So if you take the metaverse at the top level, you've got to narrow it down that I need to be who I am, which is an avatar. And then at my core is, who am I really? And if we go to even the movie Ready Player One, why, you know, Wade Watts was Percival in game, you know, the corporation knew who he was as a person, so he could be identified. So really, at the end of the day, the company is in the space to help consumers manage digital identity, which is at the core, help businesses, you know, engage with that digital identity, look at avatars to support interaction, and then the metaverse to support immersiveness. So we're really in the metaverse at the top layer, second layer, and the third layer is digital identity.
Okay. What so you have like, it looks like, how many like different business opportunities are there inside of Liquid Avatar? Because you have a couple of different you have, I don't want to say you use the word project, you have a couple of different operating units, different things that you're doing like right now. Give us kind of like a rundown. You have the, you know, the digital
You've got the Liquid Avatar mobile app, which is at its core helps everybody manage all those digital assets. They're digital you, right? That's we've got that, and that proves that you're you. And then that is from the consumer standpoint or from the holder of that identity standpoint. Then you've got the ability to issue credentials. And the third part is the ability to verify those credentials. And we've got a new product called Passmate that allows you to verify that. But that in itself all moves to the metaverse as well. So when I'm in the metaverse, I need to know who I am. I need to be able to interact with others that have issued me a credential. And then the third part is I need to be able to verify certain aspects. So that's our core units. Now, we also have an NFT division, which again, we were early in this, right? We talked about this last year.
Yeah. Again, it's another thing, because back in February we talked about it. I was like, hey,
right.
NFTs.
And we've been piloting. We haven't gone after Beeple. We've been piloting everything. And then this summer we really started to see the bubbling up of the metaverse, and we knew we were already there. So we started putting our programs together with a group called Aftermath Islands. And we were ready to launch at the end of November, which is just a couple of weeks from now.
This is today's news. This is related to today's news that you're doing, right?
Exactly.
I'm trying to understand, what is this thing?
So Aftermath Island, think of Aftermath Island is very simply a metaverse that is built of islands. Instead of planets or buildings or locations, it's built on islands, and every island has a different theme. Now there's method to that madness, because one, we have thematic islands like medieval islands or dinosaur islands or future islands. Then we have communities, and those communities are like Sims, if anybody's ever played Sims or Second Life. And then we have estates for the high rollers. And then after that, we're just as of today, we're announcing private islands that brands and corporations and partnerships can put together that have access. So if you think about it, we're developing land on a very quick basis for people to virtualize. Now, if you look at Decentraland or you look at the Sandbox, that's one playable surface. We've broken it in our first phase into over 20 playable surfaces.
Okay, what is this? It's funny. Like, I got to catch up to this thing, because I think there's a new thing that they're doing, which is not even NFTs. It's this digital real estate. This like digital real estate. This is what you're talking about.
Well, it is an NFT. A digital plot of land is an NFT.
Is it an NFT? It is. I guess
we hold it as a deed. It's like
because I'm thinking of NFTs as like a piece of artwork, but it's not. It's a
digital piece. It's a digital asset. It's something.
So what is this digital real estate like? What is it? There is this. I saw something on some YouTube thing. Some guy's he's this guy's doing digital, like he's like a Bitcoin, like a crypto guy, and he's digital real estate, and he's showing, hey, this is the next big thing, and like what is this all about? Like I don't get. I was like,
well, digital real estate is just like virtual, like real estate, except it's virtual.
Okay.
Then you can build on it. You can open a store on it. You can play a game on it. You can do all kinds of things in that plot of land that you own. And so it is really, if you look at, again, Decentraland or Sandbox, if you were fortunate enough to buy that 3 or 4 years ago, you may have bought it at $20 or $30 or $40 a plot of land. And some are going for thousands and tens of thousands for a plot of land. But it makes, to me as a gamer, it makes sense, right? I want that plot of land in a very visible area that I want to do things, and I want to sell product or game or quest or whatever I want to do. So we have different types of land that you can buy, and it becomes your own, and you can build on that. We now have just introduced houses, and we're introducing other things going forward. And we've got this big event at Comic-Con coming up in LA in a couple of weeks.
Okay. So this guy Vol is saying if they lock those avatars in the blockchain as NFTs, I can't even imagine what that would do to the stock. What is this guy? Okay.
I understand that. I do.
What is he saying? It sounds like a catalyst for the stock. Explain to me in English.
So originally Liquid Avatar started as NFTs. They did. But the problem was that security wasn't there to support them. We have been rethinking that process, and I'd ask everybody to stay tuned over the next few weeks to see what comes out.
Okay. So how do you monetize all this? How do you generate money? Okay.
This is easy. This one's easy. So virtual land, I mean, there's technology to build a virtual land, there's cost to build a virtual land, but when we're selling a plot of land for $45 at the outset, we're making net of selling costs, we're making at least 30%. So that's number one. So for every little plot of land that sells at 30, we're making 30%. But we also make money on all the accoutrements, all the assets, everything that goes on. And we're starting to see, as we are with Vegas Island, we're starting to see commercial relationships where we'll earn fees as landlords on these virtual islands. So the opportunity is immense, in my opinion, because we are going to be the landlords. We are going to be some of the land purveyors. And on top of this, this organization that we partnered with and is a client of ours, Aftermath Islands, we have an opportunity to take a sizable piece of the equity, and we're getting land deeded to us as part of our deal. We haven't announced that yet. That's
Okay.
We've announced that we're going to do that, but we haven't announced when.
Okay, so this is the Aftermath Islands. Okay, so now you have multiples. Okay, so Michael's saying, is Liquid making any money? If yes, what are the source and how you make money? I have a lot. Yeah, so Michael, actually, I think I remember he was early on. I think he bought a bunch of.
Well, I can't. We're still an early stage company. We made that very clear in October. On October 1st, we declared that we were going to revenue, and that's what we've been doing. But we are an early stage company. I mean, and that comes with its own set of risks. But we have turned the corner from being purely a development company into a revenue company. But that will not start showing benefit to our shareholders probably till our financials come out in first quarter of 2022 when our year ends come out.
So basically in a couple of months, we'll start to see some. But,
Yeah,
but even with that said, I'm not expecting any crazy numbers right now. It's
well, not yet. Simply because the smart business says test, retest, figure it out, and continue to test. We only launched the Metaverse platform, I think 14 days ago, probably a little less. And at the end of the day, we're very happy with the progress. We're starting to test new forms of advertising. We're going to be testing at Comic-Con. So we're seeing great results, and the feedback has been excellent. So we're seeing the fruits of our labor. One was to build a digital identity, 2 was to build the avatars, and 3 was to start participating in the Metaverse. And that's been our game plan, and we're executing on our game plan. Plus, in our digital identity space, we've been locking down some really great deals as well.
Okay. No, it's okay. So very interesting stuff. So Nikos is asking, we are awaiting Aftermath Islands game at what is the
Aftermath is going to launch its first set of islands, we expect, by mid 2022. And again, everybody has to be a bit patient because we're building, again, new technology. And everyone also has to understand truly that the Metaverse is going to come out in stages. We're going to see more traditional Roblox type of applications first, and then we're going to see immersive AR and immersive VR come out afterwards. But the computing power needs to be there, and the bandwidth speeds need to be there.
Okay. No, it's very exciting. No, again, like it's pretty interesting because, I'm thinking like when you first came on the program, I said, hey, this guy is like this pioneer. He's been very early in a lot of these big themes. And now I realize the NFT thing, you were like one of the first public companies that was involved in the NFT thing. This is starting in March. You were talking about NFTs, or February.
Yeah.
Now the Metaverse thing it's like, I think at some point something is going to click here, and one of your things is going to get traction. And when one of these things gets traction, I think the stock can go crazy. I mean, because it's happened
to us before. It has happened. I mean, and obviously everyone has to do their own due diligence, and past results are no indication of future.
Look, it's emerging growth. It's speculation. It's
right, exactly. But we've seen this. We've seen this in our other companies, and at the end of the day, it really is a catalyst. We think that the Metaverse is a catalyst for us.
What's happening at the Comic-Con? What are you doing with the Comic-Con? That's
gonna be interesting. We have 1,500 square feet, and we are the digital innovation partner. Right now, we just approved this morning all our graphics. We have in the middle of our booth, we have a 16-foot tower with a 10-foot video screen in which we're going to showcase all our products and services. So we're showcasing all our digital products, and as well as some physical products with our partners at Apex Comics. And we're also going to be doing a digital scavenger hunt. In 2019, when the last LA Comic Con was on, they had 123,000 people show up.
No, it's a major event.
Yeah. And it's in the heart of the entertainment industry in LA. So should be a big, exciting opportunity for Liquid Avatar.
Okay, in a booth, if you have 1,500 square, that's a large booth.
That's
because
large
a typical booth, a typical small booth is 100 square feet.
Yep.
You know, 10 by 10, whatever it is, 100. Okay, so so 1,500. That's basically 10 booths. That's a big space.
It's about 15 booths almost. So
15 booths. Okay.
Yeah.
So it's a major exposure. I mean,
Yep.
I hope you have the stock symbol plastered all over the signage.
Well, it'll be on certain things. It's the this is for the comic book industry, so we'll have the stock. So stock will be visible.
So what you're going to be there, obviously, right?
Oh yeah, no, I'm going to be there.
So, and what are you going to be? So what's going to be? So you're going to have the booth. So what's going to be going? And I guess in theory, I know we do have investors who are in California. I mean, they can visit, right? So this is
Sure.
what day is this again? When is
It's
this?
December 3rd to 5th, and again, it's a consumer show. It's not an investor show. I mean, I'm sure investors will show up, but for us, it's about showcasing our products, getting more users into our products. We have a main stage panel on Sunday, the 5th, I believe at 10:30 a.m. Pacific, on the Metaverse. We're doing other panels. We're showcasing partnership, and we have a number of meetings already set up with major brands. So for us, it's all about how do we expand, and we've got some really cool surprises for our virtual landowners. Those surprises will be available to the general public because not everybody can make it to Comic-Con, but we have some really cool promos that are going to start at Comic-Con.
David, the internet just kind of flipped.
Wow!
Just as you were talking, I said, "What are you going to be?" So all of a sudden, you were talking panels, and then the internet kind of went.
Wow, that's weird. Yeah. Are you there?
Oh, geez. Okay, we lost David. Okay, stand by. Stand by. We should have David back in a little bit. There we go. Okay, David is back. Okay,
wow, that was strange.
I'm not sure who's. I'm not sure who's in it because I'm right now I'm talking to you from the heart of innovation. I'm in San Francisco. Heart of Silicon Valley here. We should have the best internet here, right? But it's
or it's very busy and everybody's working from home.
So So you were saying a Comic-Con. What are you going to be doing?
So we're going to have panels. We're going to have a number of panels, including a main stage panel on the Metaverse on Sunday, December 5th at 10:30 a.m. Pacific. We're going to showcase our product to the consumers. We're going to have a digital scavenger hunt in which consumers can win prizes, and they have to download our app. And we're also going to be doing some really killer promos. So those that are interested in acquiring virtual land or participating in some of our other programs, we've got some really killer surprises, and we're really, really excited. And one of the things that we are doing is we're showcasing some very young talent in the comic book industry as well. So it will be a lot of fun. But it is really built to get the Liquid Avatar and our brand out there. And I'm sure by virtue of getting the brand out there, which we've always seen, we will get interested parties who want to buy the stock. But our first motivation for Comic-Con
that's the first thing I'm thinking of. I mean, you're there
I know
the business side, but
this is really to promote the business. This is really to promote the business. But we want to see increased revenues, as I think it was Michael said. He wants to see revenues, and and this helps us get revenues. It's still an early industry, but you know, when you see numbers at Roblox and you see numbers at Decentraland and the Sandbox, I mean, you know, we're coming out, you know, what I believe is hot and heavy to try and really make a name for ourselves. And I know this morning I saw a couple people made videos on TikTok about us. So, you know, you've made it when you're on TikTok.
About the stock or the company?
About the company. About the company.
It's interesting. Okay,
Yeah.
just random kids making videos. Wow.
Influencers, they're starting to see what we're doing, and people are getting excited. I mean,
No, it's
you know, it's again, digital identity is which is at the core of our business is a bit of a difficult challenge. Not that it's not valuable, because it's valuable, but the key is if you bring people in through other channels like the metaverse, you're going to get people embracing it because it's an opportunity to engage and prove who they are, rather than having to have it.
No, very interesting. So there's a lot of catalysts right now.
Yeah.
I'm thinking purely from the stock standpoint, which I think is going to get a lot of eyeballs. Now, if you're going to be at the Comic-Con early December, that's 2 weeks from now, roughly.
Yeah,
it's a big booth, 1,500 square feet. That's a lot of space. You get 100,000 people. I think they're going to have a massive turnout because people are just, you know, they haven't had an opportunity to be out in the last 2 years. I mean, people are going to, you know, they're going to really, you know, be very enthusiastic. There's a lot of pent up kind of enthusiasm, and you know, it should be a massive success. I mean, so it's incredible. Okay, David. That said, what else can we look forward to in the next couple of weeks in terms of news flow into the end of the year, next 6 weeks roughly? After Comic-Con,
there's a lot on the go. We have a lot of product announcements coming. We have new Metaverse islands and new Metaverse products coming out. We have new avatar products on the horizon, and you know, from our digital identity standpoint, we're really making some headways into government based programs and major industry programs. So it's all really, we believe it's all really coming together very nicely, and there should be a significant and healthy news flow through the end of the year.
A couple of people asked about OCSA.
Yeah. So the OCSA is the Ontario Convenience Store Association. So we announced a deal with them recently for just over 8,000 stores in Ontario to prove age verification. So that is going along really well. We're in the midst right now of doing our focus group programs. So we're listening to feedback from the OCSA and their members, and we're building all the programs accordingly. That dovetails into potential government opportunities as well. I won't talk too much about governments, but we're having a very healthy dialogue with governments, not only in North America but outside of North America, because our technology is what we believe, and others have commented to us, is really leading edge. We really focused on making sure we had high value technology that is state of the art and meets or exceed government guidelines.
Okay, yeah, it's funny. I should have. This is. I think the OCSA. This announcement was kind of the thing that kind of got the stock moving, and that there was some interest. And I completely forgot even to ask it because I got distracted with the metaverse. But you have a bunch of really compelling growth initiatives, like we talked about earlier. There's I think there's multiple catalysts in this business right now, which could really.
Well, Jack, if I could comment, the OCSA, when you start talking about age verification, you're really talking about people that are probably 18 to 25 at best, and maybe even up to 30, and they are perfect candidates for avatars and the metaverse. So it is a trifecta for us. That's the really important thing. We've looked at age verification very carefully and knew that it fit where we needed to be. And so if you look at age verification, it goes into what we're doing with Vegas Island and some of the other programs where you have to be a certain age to be able to partake of let's say, gaming operations or other operations. So there's lots of opportunity. And what people don't realize is even in the province of Ontario, I mean, lottery tickets alone are a $3 billion industry inside convenience stores. And 3 million people a week walk through convenience stores in Ontario. And Ontario is introducing single sport betting in January inside lottery terminals.
Oh,
So you're looking at
okay.
massive numbers. I mean, 3 million people a day that we hope will be exposed to Liquid Avatar.
Okay, so there's some exciting catalysts in store. With that said, David, thank you for the update.
Thank you.
We should catch up with you at the Comic-Con. Can we do a live stream from the Comic-Con when you're there?
Certainly can try. I absolutely would love to. We're going to put
actually see it, because that'll be
Oh
exciting.
no, absolutely.
To see this.
We're going to put the strongest internet they have available, but I will warn everyone. I've been to convention centers before and run booths. The internet can be spotty at times, but Jack would love to be there. Again, it's most of it is actually over the weekend. That's the problem. It's Friday afternoon to Sunday. But what I would love to do, if it's possible, we could do something just before Comic-Con opens on the 3rd.
Okay. Oh, like from the booth before the public shows up.
Yeah.
Oh, then it's quiet, and you can have
and maybe I could do it on a phone and do a walk around.
Okay.
And show everybody.
No, we want to see the live, because we want to see
we'll take all kinds of videos,
costumes. That's what Comic-Con is all about.
Yeah, I will say this. I will say this really, really with great respect to everyone. Just because it comes in your size doesn't mean you should wear it. But that rule does not apply at Comic-Con. It is the most. See people dressed up, and in all their glory is an amazing situation. We'll have lots of pictures. So we're happy to do it, maybe the week after as well, but we will get lots of pictures and lots of opportunities, and we'll get you some film clips.
Okay, excellent. On that note, David, thank you. And thank you everybody for joining our live stream, and we will see you on the next one.
Thank you.